Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 2nd. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we had a lot of big earnings that the market is digesting, but many more to come. So, what's on your radar for this week?
Yeah, I want to take a look at Palantir Technologies, Uber, and DoorDash.
All right, well, let's start with Palantir, which is scheduled to release Q1 earnings on Monday, May 5th. Earnings for the data defense firm are expected to rise 62.5% to 13 cents per share, and revenue is seen climbing 36% to $862 million. And here's why we're watching Palantir. We'll be looking for management commentary on federal and defense spending. We'll also be watching to see if there's any updates on reports of IRS or immigration projects and deals. And we'll also be paying attention to the status of commercial AI monetization. So, Ed, I think the commercial business aspect is going to really be in focus for Palantir this earnings. There's been a concern for Palantir stock about possible Department of Defense budget cuts and some of their exposure to U.S. Army contracts. But when you hear CEO Alex Karp talk about it, it's kind of like bring it on. He's saying, line test everything. And he seems to think that this could be a good thing for the company and that they're well positioned for this. So, what's on your radar with Palantir?
Yeah, I mean, that's certainly Palantir's very optimistic. And it does seem like the fears of defense cuts have faded a little bit. And it could be that some of the chaos with that happens with the cuts could actually make it easier for a data analytics firm, AI, to step in and help with the void. But look, this has been growing very well. This was the top performing stock in the S&P 500 last year. I think it's leading again this year. So a lot of strength. The revenue growth has been accelerating. That might slow finally this time. The comparisons are going to get tougher, but this has been doing very, very well. And there's been a lot of good reports. There's been a lot of deals. One reason why this stock has been doing lately is because they seem to have new deals and new news. It's not just hope and vibes. There's real things that are happening that have really been positive for Palantir.
And I think one of those recent deals was with NATO. But as you mentioned, best performing stock in the S&P 500 last year. This year, shares are up nearly 52%. But we're on the daily here, Ed. Palantir building the right side of that cup base with a 125.41 buy point, inching closer as earnings approach. So, how are you handling this stock before Monday?
Well, I've been handling it badly because I didn't buy it. That was my problem. But it's at the buy point in my view is at 98.17 because it was a double bottom. I know it doesn't look like it, but that actually was the middle of that base was above, so that would work there. You could also see it as a cup base, but that 98.17 or that little sort of quasi handle that was formed right by it. I mean, so right there. Now it's sort of in no man's land where it's clearly extended from that 98.17 and it's not at the cut base buy point. I think the concern would be is if it broke out after sort of running up, it's really, I mean, it's doubled almost doubled from the low from just less than a month ago. That's a huge run. So if it gaps up to say 130, that would feel a little extended. So it'd be great if it could form a handle. It's not going to happen before earnings, clearly. But or at least if it paused somewhere, but it's been acting extremely well. Anybody who bought it at 98.17 could certainly be holding it because there's pretty good cushion here. So a lot to like. I don't see a place for it for a new buy. You could buy it if it breaks out through 125, but that would also be there would also be some added risks to that as well.
What about any option strategies for this one?
Yeah, I mean, that's always a way to play earnings ahead of time. That's one way. It's going to be expensive because the expected move is going to be pretty high. I mean, that's the problem when you have these stocks that have high daily moves. I mean, this one could move. You can see the gap ups, and they've been strong. There have been some big gap ups. On the other hand, people's expectations might be very high. If this one disappoints in any way, you could see a 20-25% drop. Now, does anybody expect that? Nobody's expecting that. But that means that if something bad happens, we've seen some pretty amazing drops on some stocks, amid all the strong earnings that we've seen in the last couple of weeks.
And I'm just switching over to the weekly ad, and you can see since mid 2023, this stock has just been on a tear. That RS rating, blue dot, highest level as the base is forming here. But as you mentioned, we have Really strong EPS growth. Those comparisons will get tougher. We see the sales growth over here in the mid 20s to the 30s. Really solid numbers for Palantir. So, any other thoughts here with the fundamentals?
Yeah, it'd be great if we could have another quarter of accelerating growth on the revenue side, and maybe it'll happen. Just to see that is, but those really strong growth. I mean, people are expecting it, they're hoping for it, and it's been delivering that growth. So just want to see more of that and continue to do well.
All right, well, let's move on and take a look at DoorDash, which is scheduled to report Q1 earnings on Wednesday, May 7th. Earnings are expected to total out to 39 cents per share versus a loss of 6 cents the previous year. And revenue is projected to climb 23% to $10.72 billion. And here's why we're watching DoorDash. We'll be paying attention to gross bookings in that earnings call. And Ed, DoorDash had a great 2024. Analysts expect more gains this year. Just based on growing in international markets and expansion beyond food delivery. And speaking of moving into more international markets, news came out this last week that DoorDash made an offer to buy a British food delivery service called Deliveroo. So, what are your thoughts on DoorDash heading into earnings next week?
Well, first, let me disclose I do have a position in DoorDash, and we can go over that later. But uh, I'll have a decision to make. But this is doing very well. I mean, look, the stock in the company in 2024 shifted, at least on an adjusted basis, towards profitability. And what's nice is that yes, there's dealer. This isn't a software company where the margins are like 100%, but still, there's can be pretty strong margins. You can see that tremendous growth when a company turns into profitability. I mean, just it's pretty easy to go from a penny to 5 cents and have this enormous growth. I mean, those kind of analogies. And so while it's richly valued, there should be tremendous growth, at least in the short run. Again, people are expecting that, but a lot to like about this name in terms of the growth. You know, if Gen Z can't cook, they got to get food somewhere. If they can't drive, they can't cook. They're going to have to order in. But I know a lot of other folks that use this. It's becoming just one of those one-time luxuries. It's sort of like Starbucks and other things. It's like these luxuries that you want. I'm not going to pay $5 for a cup of coffee, and now, of course, you're off to pay $5 for a cup of coffee. People are willing to pay those delivery fees, and it's doing very well.
Well, I think certainly, I think people like to have a little treat every now and then, Ed. But we're on the daily here. We can see it's in a double bottom base with a 201.03 buy point. But talk to me about this chart here, because this potentially could be actionable when earnings come up. So, how are you handling this one?
Yeah, I bought this as it moved above the 50-day line. Sort of there was a downward sloping trend line from the top of the base. So I sort of got in there. So don't have much of a cushion. So I'm gonna have to figure things out, but it feels like it's in between things. I mean, you could buy it now, but with earnings coming up, it just, there's not that makes it tough. But one thing is that the volume has not been very strong on this latest move. The last few days, it's sort of like not really seeing power. That's not great. The relative strength line is basically at highs. It's not quite a blue dot. It might be on a weekly, but it's which would suggest a new high within that. It looks like it's just shy, but it's very close. So that's been acting well. So that's the thing. It needs to get. I think for now at this point, you'd be looking at getting above that double bottom buy point, uh, and just for there. Personally, I'm gonna have to make a decision about whether or not I want to sell some of my position, or if not all of it, because there just isn't much of a cushion right now. But that's something I'll have to do. And it's like, because again, we've seen things that could go great, it could go great, but it could also be a big mess and that you can't protect yourself from. One thing is that, again, because of that low volume, even though we've had several weeks of gains, the up down volume is a 0.7. So that's not particularly strong. You want to see it above 1. The accumulation distribution rating is a little better, B minus. So there is some things out there. And if you look, there are a lot of institutional owners on this one. If you go to the related information panel, owners and funds, you can see a lot of IBD mutual funds that have gone into it. And just there's been more funds in there. If you scroll, like if you look at those down below, a lot of funds in there. And that is interesting, a departure from Palantir. Palantir has a lot of funds in it, but none of the IBD mutual funds. That is one mark, is that it's been this tremendous stock, but maybe for whatever reason, some of the typical IBD mutual funds haven't got into it. But this is acting well, but we'll have to see. Earnings are coming.
Yeah, and I think that's probably why Alex Karp always gives a shout out to the retail investors
Yeah.
on his earnings call. But just quickly looking at the fundamentals here, Ed, as you talked about, you see this tremendous growth, but of course that's compared to when you had losses. So really looks impressive, but as you mentioned, easy to look really good when it's versus a loss the previous year. Anything else jumping out to you on the DoorDash chart?
Yeah, and this points out that basically we've had 1 quarter of earnings is what it really comes down to. So it turned the whole year profitable, at least on the other measure, but it's just turning around. So have to see there. Obviously, expectations are high. This has gone on a tremendous run. Can it continue to go on a run? We'll see.
And again, just really strong sales numbers as well in that mid 20 range, which we like to see. But all right, let's move on to Uber, which reports earnings on Wednesday, May 7th. The rideshare company is expected to see Q1 earnings come in at 51 cents per share versus a loss of 32 cents the previous year. And analysts expect revenue to climb 15% to $11.63 billion. And here's why we're watching Uber. Like DoorDash, gross bookings will be key. And we'll also want to see more information on Uber's self-driving partnerships. So, Ed, I think for investors that have been following Uber stock, it's taken them through a lot of ups and downs since it went public in 2019. It's still not completely profitable and on an annual basis, but there's a lot of growing confidence in some of these autonomous driving partnerships that we've seen being announced. So, what are your thoughts with Uber?
Yeah, I mean, it's an interesting company, and you also have to keep in mind what does Tesla say? Because part of some of Uber's ups and downs have been on hopes or disappointment about Tesla. So that is something that could be a wild card. Everything's going fine, and then Uber could fall 10% because people feel like that's happening. Yeah, some of this stuff is weird. One reason why it's going to drop, I think, the earnings this year, I think, because I think they include investment gains and some other stuff, so it gets a little there's some other stuff in those earnings numbers, which makes it tougher to see in there. But I think people still feel pretty good about the company. Self-driving partnerships had recently announced a self-driving partnership with VW. I don't know what VW has. I mean, VW and Ford had been working on something called Argo, and they dropped it because it was good, but just not, they just feel it wasn't good enough. Meanwhile, they have businesses with Waymo. Waymo is working with Uber in some cities, but not others, which is one thing that raises concerns. But if you feel like, I think a lot of people think that as long as you have a bunch of robo-taxi operators, that there's a place for Uber, because an Uber might work as an aggregator app. I think the concern is that if it's just Tesla or just Waymo, that they'll just go alone and say, we'll just handle it. We don't need your app. We'll just, because everybody will know it. So that's an issue there. And so it feels like there may be more here. But again, a lot of ups and downs, and there's a lot of things where like, oh yeah, there's this tremendous future and others will say, no, there's no future for Uber. So that's one reason why I think you see these swings, because it's not just a matter of, oh, I think Uber will go up 20%. Oh, I think Uber will go down 20%. It's almost like there's just this real dichotomy between the bulls and bears on Uber, sort of like Tesla in that regard.
And Ed, we're on the daily chart here, and you mentioned those swings. We can certainly see it in the chart action here. This one, pattern recognition says consolidation with an 87 buy point, but I think leaderboard was kind of looking at this as maybe a potential double bottom base with that 77.58 buy point as an aggressive entry. It's certainly gone above that ahead of earnings. So, what are your thoughts here with the technical action?
I agree with that. And I think the 8210 is also something because it also goes to the left-hand side. If you look, there was a prior base. The only reason it gapped out of that base is because there was initially negative vibes out of the Tesla robotaxi event, but then it switched around. But generally there's a long consolidation that it could be sort of getting out of getting above 82. Uh, but yeah, it's the technical question. That's the problem, is that it'd be nice if it settled down. It'd be great if it could just sort of paused here. I mean, if you bought at 77.58, you want to keep on going so you get a good enough cushion. But for others, you might just want to see if it can pause here around the 82 level and then move on earnings. And I don't know if that's going to happen. Obviously, a lot of things going on with the market. So that's one issue, is that it's pretty volatile. And that's just something that, you can see some big moves up and down. That's something I don't really like about this stock. Whereas Palantir and DoorDash seem a little tighter. This one seems really, really wide and loose at times. Doesn't mean it can't go on a big run. And on a weekly, The relative strength line hasn't been particularly good. It's been good in the last several months, but there's been some up and downs. It's still got some ways to go to get above the highs from like a year or so ago. But uh, but the revenue growth has still been pretty solid. That might slow down a little bit. Again, the earnings are going to be a little bit screwy, I think, because of investment gain comparisons. The underlying business, I think, is still doing fine. So people might look at EBITDA and other things, and that's why the gross bookings are how much demand is really out there, getting a sense of things.
All right, Edward, those were some of the top names on our radar, but of course, there's always more to look at. We had Amazon earnings this week, but we also have the Amazon of South America, Mercado Libre, reporting next week on May 8th. So let's go ahead and take a look on that chart. I'll switch back to the daily here. This one breaking out of a double bottom base, just hovering at the top of that buy zone. But what are your thoughts here with the chart?
Yeah, this one's volatile. With the earnings are volatile. The stock is really volatile. The one positive is that Mercado Libre being Brazil isn't as affected by tariffs as a lot of other countries, and the country seems to be doing reasonably well. But this e-commerce and payments giant, it's like you want to wait for earnings, and it'd be great if it sort of formed a handle or paused here. It does have a tendency to go back down into the prior base, go back down to the 200 line, even undercut it. So it's getting a ways from that. While there was probably an early entry, you know, below the buy point of 2020, 200, like something, yeah, down below that somewhat, yeah, in there, those kind of areas, I think you just have to wait and see if there's a safer buying opportunity with this one.
Right. Well, sticking with the e-commerce theme, let's take a look at Shopify. They're scheduled to report on May 8th. And again, another double bottom base with a 111 buy point. This one looking a little sloppy, Ed, but looks like it's trying to regain that 50-day moving average. So, I guess if you wanted to be aggressive, would this be a potential entry here, or how are you hoping that this will set up before earnings next week?
Yeah, my concern is that, those tariffs are going to have an impact. I mean, for this company, I don't, all the businesses that it runs, it basically runs websites for other folks. So its customers may have trouble with that in the volume that it goes through. And so that could be an issue for them. I think we'd want to know. I think there's a lot of questions. This one could easily have a big move on earnings either way. I think you'd want to wait. Uh, you know, uh, there might be an early entry if it sort of creeped above these levels on earnings, but it could also just be gapping up, and 111 or something would be the more reasonable, more realistic scenario for an opportunity. But yeah, it's a lot of questions with tariffs that I don't really know what they're going to be doing.
Well, maybe we'll get some comments there, but we've been seeing a lot of companies hesitant to give any guidance. How about Fortnite on the cybersecurity front? They have earnings due on May 7th. We're still on the daily here. In a cut base, 114.82 buy point. We see that RS blue dot hitting the new highs. So, Ed, how are you handling this one?
Yeah, you probably could have seen a really sort of strange looking double bottom, an unsightly one at 102.34. So it's sort of above that. Again, it's sort of in no man's land between that kind of entry, whether it's or just the traditional buy, the top of the base. Just see what happens here. There are some other names that are outperforming it right now. The growth isn't as tremendous, but cybersecurity and software to a broader extent is something we're looking at a little bit, somewhat separate from tariff concerns, and maybe can is expected to keep growing in the without even with if the economy struggles a little bit. The revenue growth has been accelerating. Maybe the comparisons will get tougher, so that's been pretty good lately, and earnings have been strong as well.
All right, well, let's check in on App11. They have earnings on May 7th, and this one was a big winner in 2024, but we've seen this really ugly sell-off at the beginning of the year, and it seems like the stock is really trying to bottom out and make a move. It's inching closer to that 50-day line. So thoughts here on the technical action?
Yeah, I think this needs more work. I mean, again, not saying it can't work, and this could go on a big run. I mean, because we know that, but it just seems like the risks are pretty high. This is not a double bottom base. It's sort of you could sort of look at one, but it's not because it's too low. The 50-day line is really tumbling. I'd like to see it get well above 350 toward 400, then pause, and then set up. And that's I just think that there's other things out there and other growth stocks out there that show things. It's still worth looking at. This was a big winner last year, and maybe it'll set up again, but I don't think it's in a great position right now.
All right, well, let's look at a couple of chip names, Ed. Starting with AMD, they post earnings on May 6th. This one, definitely not the market leader here. We see it's just been in a very long downtrend over the last 8 or 9 months or so. But thoughts here, and what are you hoping to maybe hear from these earnings?
Yeah, I'm looking. This is more like what are they going to say about AI and other things? What I want to hear from them because this stock needs a lot of work, and it just feels like it's the laggard to Nvidia. Nvidia is trying to bounce back, but it's not doing it. I'm looking for more color on AI. I mean, we're getting a lot of it from this current week. We're going to hope, but that's what I'm really looking for.
All right, and let's look at ARM as well because they report on May 7th. Kind of the same story. We saw this really ugly sell-off here in February and March, retaking that 50-day line, but looks like it has a lot of work to do.
It does. I think you need to get it well above the 200-day line and then set up. It's a very volatile name too. It's better than AMD because it was hitting highs or getting close to highs more recently, but yeah, a lot of work and has big swings.
All right, well, we've been talking about AI and we're going to need power to run all this artificial intelligence. So let's check in on Constellation Energy Group. They report on May 6th. And again, this one, Ed, looks like there's been a lot of damage done with that sell-off earlier in the year, probably sparked by that DeepSeek news. But looks like it jumped above the 50 and 200-day lines. So any thoughts here and maybe what you're hoping to hear on that earnings call?
Yeah, I mean, obviously they're rallying on some of the broader AI hopes. I mean, when Meta and Microsoft, and we'll see how things go. But yeah, what are they seeing for power needs? Maybe regulatory stuff because it's in terms of work on that. So CG's coming back. It seems like it needs to get back up, rebound some more, especially given that if you want to do an early entry now, it's like right ahead of earnings. It's like, that'd be a really aggressive entry anyway. But earnings are right around the corner. I think you just want to see it and maybe just see the chart develop more.
Right, well, let's take a look at Vistra as well. They report on May 7th. This one looks like it didn't sell off as bad. Again, nice jump up on Thursday, May 1st, but above those 250-day moving averages. So thoughts here, Ed?
Yeah, that one's looking better. Still over a 50% drop. I mean, from that top. So it was an enormous drop. You can see that DeepSeek drop. And that shows you again, is like, oh, I'm going to utility, in February where it just can absolutely collapsed in there. So just a lot of things in there. But yeah, we'll have to see. If you could look at one more TLN, which somebody brought this to my attention. This one probably looks the best of them. Again, big drop, not as bad. This one's looking the best, but again, earnings are right around the corner, and CEG and Vistra will precede it. So a lot of things can move on it, but this one's looking better.
And where would you possibly look to enter this one if it becomes actionable?
I mean, today would have been if it weren't for the fact that earnings are coming around the corner and other earnings that are relevant to it could shift it right back down. Uh, But if it paused around here, or if it came up, look, if it came up and then paused for a while at 250, that would, that area. But right now it's sort of in between waiting for our earnings.
All right, well, let's shift gears, Ed, and take a look at Ferrari, due with earnings on May 6th. This one in a cup base, 50913, building that right side. But what are your thoughts here with the chart?
Yeah, pretty sharp sell off, but I guess, Ferrari's just like, sure, our customers will pay the tariffs. And that's basically the attitude they're taking. And so, because they, pretty limited supply, still doing well, pretty sharp drop off. And it goes on runs and then comes back down. So if it weren't for the fact that earnings are coming up, going through the 50-day line might have seemed safer because when it gets up to the top of that base, it often has a tendency to come back down to quite a ways. So, interesting chart, but I probably will pass on it, unless there's a better setup.
Right. And as you mentioned with the previous stock here, we see the volume is really light.
Yeah.
Going on runs and coming back down is kind of how their Formula One team operates right now. But how about we look at some biotechs? Vertex Pharmaceuticals, they post on May 5th. Still on the daily here. This one, pattern recognition says consolidation with a 519.88 buy point. So thoughts here, Ed? It looks like it's getting closer to that ahead of earnings. So how would you handle this one?
Yeah, I just wait to see if it can clear that. I mean, I think that that's pretty much it. The earnings growth is pretty mild right now. It's supposed to be better next year. Um, but yeah, just wait to see if it can get above that.
All right, how about TG Therapeutics? They also have earnings due on May 6th. This one broke out back here in March. Looks like it had a little bit of a pullback in April. Again, that's probably based on tariff news, but way above extended, excuse me. So, what are you looking for here with TG Therapeutics?
Yeah, that was extended. It's even from that short consolidation that it just had, from 43.32, it's a little high. It's run up a lot of days. People who bought it and held on to it and have a decent cushion, that's great. And the relative strength has been tremendous these last couple of months. The earnings are supposed to be really strong the next couple of years. A lot to like about it, but it seems extended, and it may not offer an opportunity for a while.
All right, well, let's take a look at one more. Our Argenx ADR. Let me get the chart up here. I'll switch back to the daily. Again, this one in consolidation, 678.21 buy point, uh, getting above these 50-day moving averages. But again, is this another one that's kind of in a no man's land for you ahead of earnings?
Yeah, I mean, it sort of broke above the 50-day lines and people could have done early entry and they might actually get a cushion. It didn't know, that's always a risk is like there's now enough time, maybe have a decent cushion on that. I think Leaderboard took a position in that. Hasn't been a lot of tremendous volume on that, but there was also some massive volume around April. That's part of the issue on some of these things that there was so much volume in early April with the market that, it's hard to compare to that. There might be a trend line entry that one could draw at some point, but that still seems higher up there. So have to wait to see on earnings. Again, it'd be nice if the new handle formed, somewhere around here. Does, that may not develop.
All right, Ed. Well, we're taping this early Thursday, and depending on how tech earnings turn out this week, I may need a bit of a shock. So let's wrap up with Axon. That seems like the fair thing to do, right? They report on May 7th. We see another cut base here with a 715.99 buy point. This one, again, though, maybe kind of giving the spirit of a double bottom. So how are you approaching this one ahead of earnings?
Yeah, when it sort of got up decisively above that 579, like a week or so ago, and sort of after a little pause, it moved above there. Maybe you could have done that. But again, this was a picture perfect base, that prior one. Picture perfect, basically. Beautiful cup with handle, breakout, and then bam. Huge. There are some warnings, concerns about losing a partner and that how that could affect business. Maybe some of those concerns have been allayed. I think that people really want to know how that's working with government and other stuff. It just seems like a no man's land right now, and just see if it can set up, some sort of handle, maybe after earnings.
All right, Ed. Well, thanks so much for your insights. And I just also want to wish you a happy May the 4th be with you. I don't know if you're going to be catching up on any Star Wars over the weekend.
Probably will not. I wish I had Disney Plus. I'd finally get to watch Andor, but May the 4th be with you, or Cinco de Cuatro, or whatever you celebrate.
Yes, well, that's Cinco de Cuatro, a great Arrested Development reference there. It's one of my favorites. But that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And thanks so much for watching, and we'll see you all next week.